we think that gradually returning interest rates to a more normal level as the economy strengthens is the best way the Fed can help sustain an environment in which American households and businesses can thrive. The main takeaway is that the economy is doing very well. Most people who want to find jobs are finding them, and unemployment and inflation are low.
All right, Jerome Powell, the man who heads the Federal Reserve, he's not an economist by training. You can tell right away the way he speaks because you can understand him. An economist, tell me, I know many, kind of one myself. Anyway, they don't speak English. It's just arcane. It's gray. It's gobbledygook. And I have a theory that this could come back to hurt Mr. Powell down the road. When you say things like economy is great, things are going along very, very well, you don't have any middle ground to come back to or any wiggle room because your words were so clear before. So the Wall Street Journal's James Freeman, who's got an incredible book coming out soon. I guess I can't divulge that, James, so I'll leave it up to you to break publisher agreements. But what do you make of this? Because you and I have listened to more than our share of Fed speak, and he doesn't speak it. He was very, very clear as to the impetus behind the rate hike yesterday, and I guess the additional ones to come. Things are going well, and that was it.
Yeah, he's right. It's a good economy. And as you said, he says it plainly. I think a lot of people are going to appreciate the plain English approach. Certainly we're used to, as you mentioned, Fed chairman speaking in a code or a language that is then parsed by various securities professionals, and they try and inform all of us what it really means. But I think he's right, speaking plainly, that the economy's in good shape. I think it's positive that we're moving back to a real economy from a Fed-driven economy. They're signaling 4 interest rate increases this year. Markets are not having a tantrum. Now, when they say 4 interest, that
would be 2 more because we've already had one.
That's right. That's right. So a total of 4, right. And the market is not throwing a tantrum. People are confident that the economy is strong enough that with higher rates, things are going to be okay. This is a nice transition. I think if I was going to maybe pick a nit here, it would be the subject of our editorial in the Journal today, which is that you got to question the gradual plan of rate increases given the producer prices rising more than I think people expected and above the Fed's target. So he may have to go faster than gradual with the rate hikes.
Yeah, I saw that editorial and began to wonder, what does it mean? I mean, almost every meeting, a quarter-point hike. I mean, you can argue in half the remaining meetings, he's looking at the potential of a hike. But he's also going to have, a presser after every meeting rather than every other meeting. And that seems to indicate that he might be poised to move very aggressively. What if he does?
Well, I think that's good news. He's saying starting next year, he's going to have a press conference after every meeting to kind of get away from the idea people have had that they only raise rates at meetings where they're going to have a press conference to be able to explain it. And I think what he's saying is, he said, no, it's not about raising rates. It's about keeping people informed. But I think one thing it does allow is it gives him freedom to follow the data. If the signals in the economy are telling him it's time to raise a little faster, he can follow that. If not, he can proceed. But it gives them, I think, the freedom to move, but it also gives markets more clarity if he's speaking after every meeting.
All right. James Freeman, thank you very, very much.